Alright guys, welcome back to MMGinvest. First of all, equity stocks, extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. Consult your financial advisor. I am not a financial advisor. This is more of an educational channel on how to trade and economics and finance and all that. Alright. So, there's a lot going on. And everything is quickening. Like, everything is happening faster and faster. And it's really hard to keep up. Especially when you're doing both. Equities, stocks, and cryptos. So I'm not sure where to start. Alright, well, gold took off like a rocket. And it's funny because last night someone's like, hey, how is that golden cross going? And I just posted the picture and it's crossing right now and it just shot the price up. I'll talk about equity, stocks, and everything else that's going on, tariffs, trade war, all of this. But look at this. So here's the gold chart, weekly gold chart. My golden cross right here and my blue line that nobody uses, it's crossing right now. Look at it, it's shooting the price up. We're above 1300 again, and that is confirming that the bull market in gold should be taking off, and you don't want to miss that boat. All right, well, so let's take a look at this chart. Or this chart. Alright. So here's another weekly chart of gold. We had a bull flag right here, and it also helped to shoot the price up. But the fact that it just cut through 1300 so easily is it's pretty telling that gold is strong. And I think the bottom's in for gold, and I've said that before. And we've been steadily making higher lows. Now, I know other people say that gold's going to crash sub 1,000. I don't think that's going to happen. And that's because of the fundamentals. And that's because they're not paying attention to what's going on economically. All right. And the Fed, I just posted somewhere in all of my chats. Listen, the Fed's going to cut rates if the stock market keeps falling, and it looks like the stock market's going to keep falling. And it should keep falling because the cheap money, they need more and more cheap money to keep it going. All right? Even with them not raising rates, it's not enough. They're going to have to lower rates. And when soon as the Fed comes out and they lower rates, gold's going to take off like a rocket. And that's why I would rather buy gold than short the stock market. Because the stock market could melt up when they lower rates and then they come out with quantitative easing. The stock market can melt up, go higher and higher, but the real economy could be faltering at the same time. You guys have to understand these dynamics. And the dollar can also be rising or just trade sideways. Let's see if I can find that article. So, yeah, companies are buying back their shares. Russian central bank looking into gold-backed cryptocurrency. Where did I post that? It doesn't matter. Listen, what was it? The Fed, the IMF and all of them, they were already talking about trying to control the 10-year and the 30-year long-term interest rates. Yesterday or the day before on CNBC, they came out with another Fed official came out and they were saying, well, we're not going to raise rates. We're not thinking about lowering rates yet. we're waiting to see, we're waiting to see what the stock market does, even though the federal, the central bank's supposed to be independent of the stock market, but they're not, because the central bank blew up the stock market into a giant bubble. The stock market is the Fed's number one concern, because if the stock market goes, everything goes. Their banks go under, and the banks and the central banks are a conglomerate of all of the other regional banks, like JP Morgan, Citi, Bank of America, all of them. So they're gonna lower rates. I don't know when, but everything's quickening, especially with the tariff wars. And you guys have to understand the tariff wars. I'm going to go into that in a second. Let's go through some of the charts real quick. I'll try to go quick. And people who make 5-minute videos, they're not giving you information like I am. That's why my videos are long. And I don't care about your attention spans. Learn something for once. Alright, so the dollar. Let's take a look at the dollar. The dollar is strengthening. But you guys have to understand, the dollar is not strengthening against gold. It's not strengthening against utilities. It's not strengthening against food, against resources and energy. It's strengthening against other fiat currencies, and other central banks around the world are printing money. And they have negative interest rates, and they're lowering rates. You guys have to understand this. The EU, the Eurozone, the Euro fiat currency is tanking. Where's the Euro? That's why the dollar is strengthening. That doesn't mean that the dollar is strengthening against gold. People don't understand that. It's so stupid. Where's the euro? Let's do euro against dollar. Because I should have made a chart. I'm going to show you guys a chart of all the fiat currencies versus gold. The euro is dropping against gold. The pound is dropping against gold. All fiat currencies all around the world are dropping against gold. The Aussie, the Chinese yuan, the Japanese, all of them. They're all dropping against gold. The dollar is the only one that's holding up against gold. Alright, so this is the euro against the dollar. It's been dropping since 2018 like a rock. As soon as it breaks below a 1-to-1 parity, so 1.0, it's gonna just drop, and it's gonna go to zero eventually, as all the European countries break away from the centralized commie eurozone. Alright, let's get back to the stock market, the U.S. equities and whatnot, because that's what matters the most. Also, in the private membership of MMGinvest, I was talking about a few days ago, Ford and GM, they're going to drop because auto sales are just diminishing. All the baby boomers have bought all their cars. The baby boomers are the only ones who have money. Generation X has a little bit of money, and then everything under that are broke. Millennials are worthless. They're broke. So I think everyone's bought their cars now and financed 72-month leases and loans. And the tax... Okay, so Trump had the tax breaks for small businesses and for individuals. People just don't understand that you're getting more money from your employer every paycheck. They're not taking more out in the beginning. So therefore, at the end, you don't get a large... tax refund like you used to, but you actually get more money over the span of the year. Unfortunately, people don't know how to save money, so they don't know the difference. And they think that they're getting less money, but they're getting more. It's just that the government's not taking more out of every paycheck and using it and holding it. Meanwhile, inflation runs higher within that span of year. So you're actually getting money up front. You just have to learn how to save. So your tax, most people, I don't want to go into it, but honestly, like 60% of Americans get tax refunds and like 30% pay into taxes. There's more people getting pulled by, there's less horses pulling the wagons. Let's just say. And once there's too many people in the wagon and not enough horses to pull it, what's going to happen? All right. What is this? So the S&P 500. Here's the S&P 500. Now, it's way too early to even say this or consider this. Oh, by the way, in my previous videos, I said the S&P 500 was going to pull back and fall, right? We made a slightly higher high and then just broke down. And a lot of people are saying this is an M top or something, like a triple top, a double top. I think this is more of a broadening top. Now, what is a broadening top? Here's a broadening top. Let me make this a little bit smaller over here. All right, so broadening top. So you have a 1, 2, 3, 4, 5, 6, 7, 8 pattern. And this is what it looks like. The broadening top. This type of expanding triangle usually occurs at major tops. It shows 3 successfully higher peaks and 2 declining troughs. The violation of the second trough completes the pattern. This is an unusually difficult pattern to trade and fortunately is relatively rare. But no one's expecting it, and that's why I am expecting it. So we'll see if this plays out. So the broadening top is confirmed once we hit that 6. I think once we hit the 6, the Fed down here will capitulate and lower rates. That'll cause a rally in the market, but that won't be enough. And then the market will rally or will drop off again because that confirms that we're going into a recession. And then what are they going to do? They're going to print more money. So they're going to come out with QE4 once we fall past this lower low on the S&P 500, which is around 2,300. The Fed has to print more money, and they're gonna have to print more money than they did back in 2009. So that's what I am expecting. Let me turn off one of my phones. I have like 4 phones because this thing is really annoying me. Keeps beeping. So that's what I'm thinking, guys, with the equities. So let's take a look at how, so is the stock market going to continue to fall for the next few weeks? Now, I kept mentioning in my previous videos, sell in May and go away, and that's pretty much what's happening. Here's the Russell 2000, 2,000 smaller companies in the U.S. I think this is a great barometer to see what's going to happen here. And I think a retracement back to the lower range of this descending triangle and back to the 38.2 Fibonacci would make sense here. Looking at the oscillators, there's further to fall on the Russell as well. Much further to fall. This is a weekly chart of the Russell 2000. So, yeah, and a retest of the 200-week moving average would also make sense. So we're looking at a drop to the 23.6 fib retracement or all the way back down near the 38.2% fib retracement. And then I have a smaller fib retracement from that bottom down here, which easily would be the 61.8. So there's two Fibonacci retracements. A larger time frame retracement from the bottom of 2009, and then this other Fibonacci retracement from the bottom down here from that V-bottom rebound reversal that we had a few months ago, which would take us to the 61.8 Fib retracement. So that would take us to about anywhere from 1450 to 1400 on the Russell 2000. And then the private group of MMGinvest, I put out that the SQQ, and then there's an inverse ETF to the Russell 2000 as well. Those two took off like rockets. Let's look at the Russell inverse ETF. Russell 2000. Short. I didn't actually buy it this time around. I bought the SQQ. Where is it? Trading Views garbage. Alright, so here's the weekly. And we had a nice rally. A 3 count, and we might actually get a 9 count on the Russell ProShares short. This would have been a great trade. Now, I don't short outright any of these indexes or stock. Well, I do some stocks, but I'm very picky. But shorting the stock market is dangerous. But buying an inverse ETF is less dangerous. I mean, it's still the same thing. You're still shorting, but buying an inverse ETF, I believe, is much easier and less risky. Alright, let's look at the NASDAQ as well. So, a lot of my calls in the private room have been working out really well if you've been listening. Sometimes I don't listen to my own calls because I'm so busy. And I miss them and I don't make a lot of money. I should be making so much more. It's just that there's just so much going on so fast. And I'm busy with life right now. Alright. The NASDAQ is falling to the 38.2 Fibonacci retracement to pretty much 7,000 here. The NASDAQ's been performing the best, and it hasn't fallen as much as the rest. But we could see a little more downside here to the NASDAQ, and then possibly a bounce. So it's tricky, you know, it'd be really tricky playing an inverse ETF right. If you were to buy now, it'd be a little too late. If you've been in it for the past week or so, you're doing great. You're doing mad gains. But jumping on a short right now, or an inverse ETF to the equities side of things, would be risky, because we could be coming up on a dead cat bounce soon in the next week. This is a daily chart of the NASDAQ. By the way, this is also looking like the S&P 500, a broadening top. So I would look to take profits around 7,000. It will probably get a little dead cat bounce. And then if it breaks lower, this will be beautiful. If this happens, gold's going to take off like a rocket. My inverse ETFs will make me a ton of money. And my individual shorts on individual stocks I'm looking at are going to do really well. Also, I talked about General Motors and Ford. So here's Ford on the left. Here's General Motors on the right. And they've been selling off in a big way recently. And that's because auto sales and their inventory levels are just through the freaking roof. Just drive around, guys, anywhere in the U.S. The dealerships are packed. Even their overfill lots that are sometimes down the street so no one sees them, those are packed. And now they're parking their extra inventory in empty parking lots of shopping malls that have gone out of business. And I've seen this where I live. And you go anywhere in the U.S. and you'll see this. And the small used dealerships, they're packed. And they're artificially keeping up the prices right now. But I swear to God, next summer, cars are going to be 50% off to today's prices. They're not going to be able to sell them. People have been leasing and financing new cars, $60,000 trucks and new cars for the past 4 years. And the used cars and trading in their used cars. There's so many used cars inventory-wise. There's so many new cars inventory-wise that Ford and GM, they have to cut production, and they're closing plants everywhere. And Trump might come out and somehow force them not to, and that's just not going to help because these automakers have to do it because they can't pay their union workers who don't, who stand around, get 15-minute breaks every 30 minutes. So, also, Ford and GM, they just can't compete on a global scale. And now the tariff wars are, they're going to impact Ford and GM globally, their sales internationally. So, yeah, it looks bad for internationals. And internationals are the S&P 500. All those U.S. companies that are in the S&P 500, they're international. Also, let's take a look at the FANGs. Here's the FANG index. Getting slaughtered. Looks a lot like the S&P 500, doesn't it? And everything else. So everything's on support right now. So that's why you would have to be really cautious right now, because they're going to come out and do something to stop the market from falling. The plunge protection team, which is not a conspiracy anymore. People used to make fun of people who used to say there's a plunge protection team. Then 2 years ago, they came out and admitted, yeah, we have a plunge protection team. Literally. So, it's funny. Every conspiracy turns out to be right. Alright, so it's on support now. There's probably going to be some sort of bounce, dead cat bounce. And this is when I am going to put on more on my inverse ETFs and go to short on individual companies. Not so much the FANG index, but individual companies. I had a Netflix chart. There's no point of going into the Google, Netflix, Apple, and all those charts. Amazon, they all look like the S&P 500 and everything else. Apple's getting slaughtered right now because of the tariff wars. And China, you know how China has that social credit score system? All right, well, that system, it's crazy. This is how you control mass populations of billions of people. You get that system somewhat running in the major cities everywhere. And the Chinese, the news will come out and they'll tell them, hey, don't buy U.S.-made products. And then the social credit score system will track that if you buy an Apple product or a GM truck or something, or a GM vehicle or something like that, right? So the Chinese citizens won't buy any American-made goods, and then all sales and all companies that are like getting huge revenue from China are it's just gonna drop to zero. And Apple's getting slaughtered right now. Let's take a look at Apple. So here's Apple. Look at this. This is a 4-hour chart of Apple. fell from 215 all the way down to 175. And I missed this, but I do have a buy signal on the day. So let's hope for a nice bounce, and then I might go short Apple. Look at this. Beautiful. So Apple might retest. I don't think it'll retest 200, but at least it'll get maybe back up to the 200-day moving average, around 180, 188, somewhere in that range. And then that might be a good short. Also, how's my Tesla short doing since I shorted it since 350 bucks? Doing pretty damn good. This is my best short I've ever had in my life. Also, is there a bounce coming on this sucker? I don't know. It's on major support. I'll keep you guys updated in the private group for Tesla. There has to be some sort of relief rally. And if there is... Hold on. If there is, I'm going to add, and then boom. I'll keep you guys updated in the private room on this. What else? Oh, here we go. Apple, Dow Jones. Let's take a look at Netflix. I hate Netflix. Such propaganda on Netflix now. Every TV show, everything is like, it's really bad. It's like satanic. If you look at the teen sci-fi section, it's all like witches and blah blah blah. And monsters and goblins and... You know, everything's like anti-family, anti-normal, anti-male. You know. What else? Netflix. Let's take a look at Amazon. Amazon's the strongest out of, you could say, the FANG stocks or the big cap. Yeah, well, Netflix is hanging on there as well. I think Netflix will possibly falter. I don't know. Netflix is a difficult one. Because a lot of people, you know, they can't afford to do anything. And they'll just watch TV, which is real productive. But Apple, just tanking. What else? Put in the comment section what you want me to look at. I'll get to bonds and treasuries in a second. Alright, so Uber and Lyft. The recent IPOs, right? They had initial public offerings. They caught a bid today. But, you know, I don't like Lyft. I think Lyft is worse than Uber. And Uber is pretty bad. Neither one of these actually make money. And will they ever make money? I don't know. They're sort of betting on the fact that they're going to have driverless taxis, which I don't think is going to happen. Because we don't have I don't think we have the technology to do that. Tesla definitely doesn't. But, they still might pop and rally based on just speculation. Alright? And Uber, you know, it's sold off quite hard since the IPO. It IPO'd around like, I'm not exactly sure what the IPO price was, but the first day it traded all the way up to 45 bucks, fell all the way down to 36. Right now it's at 40. I could see Uber just rallying up to like maybe 50, maybe 60, but that's only if the stock market's rallying. So it's tricky. So let's say we get that dead cat bounce on equities on all the indexes. You might catch a nice trade to the upside on Uber, maybe to $50 or something like that. But that's, it's a highly risky speculative trade. So obviously use your stops. And you might be able to, let's take a look at the hourly on Uber. Yeah, I mean, if you get a dead cat bounce in equities, this could turn out to be a decent, quick swing trade to the upside for next week. Nothing long term. Obviously, you'll have to watch it. You have to be active. Because Uber is in a giant triangle right here. So I could easily see a nice breakout to the upside. Boom. All right, let's get back into economics and stuff. When is this collapse gonna happen? Well, the collapse. Like I mentioned earlier, I think, okay, this is my game theory. The market's going to sell off, especially with all this tariff wars. Now, you guys have to understand the tariff wars before I go into bonds and the yield curve and all that. Where's the news? All right. Italy signs on to Belt and Road Initiative. One Belt, One Road initiative. So Europe is very pro Silk Road. And if you guys know what the Silk Road is, I'm not talking about the Bitcoin one. I'm talking about the old Silk Road to China. It was a huge trade route, which gave China superpower status for like 1,000 years or something. By the way, if you guys don't know history, now the recent history that's been written that everyone learns about is Western history, because the West has been the superpower for the past couple hundred years, or the past 1,000 years. But prior to that, for 2,000 years, China was the biggest and strongest economy prior to Europe, back in the medieval days and stuff like that, when gunpowder is made. And China had a Silk Road that went into the Middle East, Rome, into Africa. And they're rebuilding that right now. China in the past 2 years built roads all across Africa. And they're buying up Africa. And they're taking the resources, right? So, and they're going to do the same with the Middle East. Except the Middle East is such a hot zone. There's wars everywhere. And, Europe right now is signing on to making a trade pact with China. And that has a lot to do with the tariffs and the trade war with U.S. and China. China and the U.S. right now are in full-blown economic warfare for the next superpower of the planet. And that's what's happening, guys. That's what the tariff wars are all about. And it's going to come to light, Trump's going to say the truth as this tariff war continues, that China's trying to be the next world superpower, and it's pretty obvious they are. And Europe is sort of taking the side of China, and so is Russia. And the Middle East will as likely, because we've had so many wars there recently. No one likes the U.S. in the Middle East. And Africa has already fallen to China. It really has. And no American is aware of this because, they're busy with PC culture and what else? Social justice warrior and all that crap. All this, and when in Rome at the end of days times when society breaks down. And they're in the political war in the U.S., right? Everyone's so concentrated on that, they can't see the big picture of what's happening globally. And globally, what's happening is China's taking over the world here. And it's not good, actually. Now, I don't think China's going to be really all that successful because China's in a giant bubble, just like the U.S., and they're going to fall. All right. So, but you guys have to keep that in mind. Also, at the same time, Europe is falling towards nationalism. So there was a bunch of elections recently, this past week. Brexit's going to happen. The UK is going to break away. Good for the UK. Italy's going to break away. So is Spain eventually. The EU's going to break up. All right, guys. And then they're going to do their own trade with probably China, and who knows. There's going to be a lot more free trade. The Eurozone breaking up is actually more free market than the Eurozone staying together. All right, and that's what it's about. You guys have to understand. As Europe has small countries and their own currencies and everything, they compete against one another. They also trade with one another more. Having a centralized like USSR socialist style EU, there's less trade, there's more taxes, endless regulation, and more debt. And that's just that. It's going to break up because Italy is so debt-ridden, in the pigs, right? That's what they're called. Spain, Italy, those southern European countries. There's so much in debt that Germany can't bail them out. So it's going to break up. That's why I think the EU currency is going to just freaking not exist like 5 years from now. So it's going to happen. And this is actually positive for the dollar and for the U.S. stock market for the midterm, short-term, midterm. All right? So keep that in mind. So the U.S. still is the best, like, it's like the best shirt in the hamper of dirty shirts. If that's a good analogy. But the U.S., I mean, it's still slowing. Because every recession signal is starting to really pop up. The 10-year Treasury is below the 3-month yielding. The yield curve inversion continues to invert. And I don't know. I don't know how much time we have. Sometimes you have like 18 months after yield curve inversion. So here's another article. I'll post these in the free rooms of MMGinvest. The links are below this video in the description channel. This is a good article. Even the 10-year yield for German bonds are just... The world looks the same all around. This is what happens when the world reserve currency becomes a Ponzi scheme. So therefore, every other fiat currency becomes a Ponzi scheme because they all, in tangent, do the same thing. All the central banks all around the world. Because everything's so intertwined and interconnected with derivatives. There's like 4 quadrillion in derivatives. And Deutsche Bank right now is like... It's pretty much already imploded, so they're just going to merge it with another zombie bank, and they're going to bail it out with state money printing money. Currently, you guys have to understand, there's a bank bailout happening in Europe. All over Europe, they're just bailing out the banks with taxpayer money. And that's why you have the yellow vests in France and all of this commotion in Europe, besides the immigration and everything else that's happening. Alright, I'll post this. You guys can read this. Let's take a look at the yield curve. So check this out. Look at this. The 1 month is above the 5-year and the 7-year and the 10-year. That's insane. That's hardcore yield curve inversion. This red line, that's when we have recessions. So when we hit this red line, we have a recession right afterwards. That's what these slightly gray areas indicate. They indicate recessions. This recession is going to be like first of all, we've been in a recession ever since 2009, but the next one's going to be a stagflationary depression. I really hope we don't end up like Japan, where for like decades upon decades we just have no economic growth. Everything keeps getting more expensive, and we just have like we're running like 8% inflation every year for like decades. That is a nightmare. Because everyone's paychecks, the middle class is just going to get eviscerated. It already has been eviscerated, but it's going to get eviscerated. We need Mad Max, guys. We need Mad Max. Why do we need Mad Max? Case scenario, like the movie. Because that's the only way anything's going to get reset and changed. We need a hardcore crash where there's civil unrest rioting and the world seems like it's falling apart, and it's going to be really hard, really painful, but it'll only last a couple of years, and then, that's how society will force the people in power to get the hell out of power, and that's how we finally change everything and go back to sound money, and maybe cryptos and metals could save us, and we could go back to sound money, and all these banks go under, and all these monopoly corporations go under, and then we start fresh. And then everyone starts building their own small businesses, and governments also lose power, and there you go. We go back to free market societies all across the world, less regulations, less taxes, and that's what I hope happens. But in order for that to happen, we need a hardcore collapse. And it's not going to be pretty. It's going to be ugly. And I don't know how bad it's going to be, but I think that's the best case scenario. So that's why I'm here, right? That's why we try to invest for that case, for that scenario. Historical 10-year, 2-year spread on treasury yields. So here's there's a recession in early 90s. It was mild. Huge recession back in the 80s, and we had stagflation back then. Gas got really expensive. Of course, the NASDAQ bubble right here. And you can see the blue line goes, this is the spread. It goes below the red line every time prior to a recession. It's been accurate for the past 7 recessions. And the reason it's accurate is because of the interest rates and the manipulation by the central banks. Here's the 2008, 2009 recession, right? It dipped right below the red right prior to it. Right now, we're right above the red. So, it's going to happen. I don't know how quick, but definitely within the next 2 to 3 years. 3 years at the most. But I'm pretty confident they might keep things going until prior to the 2020 elections. But after that, it's going to happen. And Trump actually is probably going to get elected. I know I was saying he wouldn't, but there's honestly no competition for him. Besides Bernie, but, he's really, we'll see. If the stock market crashes before that, but like I said, the stock market's not going to crash. They're going to print money. It's going to have a melt up. Well, okay, so if the Fed does go back to QE4, will it be successful? I don't know. If it's not successful, and this will be in 2020, if it's not successful, then yeah, we'll just have the crash, and then Trump might not get elected. I don't know. We have to take this week by week, all right? But this is game theory. Things change quickly as well, so they will do whatever it takes to keep the markets up. Because even the elite are scared of what will happen if it tanks, if the bubble bursts. Even they are scared. Even their bodyguards, so because the masses. That's also why they push the divide and conquer these days, everything. Women against men, all the races against each other. They push this divide and conquer. Because if everyone just looked the other way and realized the control structure, the corporations, government, all that, the central banks, they're the ones to blame. I wouldn't say they're the ones to blame, but society has, society could blame itself for letting it get this far, but that's because people are greedy. That's the baby boomers, right? They sold out everyone's future. They let the school system, indoctrinate everyone. They let all this happen because they wanted their pensions and they wanted their Social Security. They want their big paycheck when they retire, and they want the stock market to keep going up because they're the ones who invested in the stock market, right? So they'll look the other way with all this shenanigans going on, so they get this, so they could live the way they've been living. They sold out their kids' future, right? That's why they let these deficits run wild. So as long as they get their pensions and their payouts. You know what's funny? They're going to suffer the most. Also, another reason they can't let the stock market fall is because if they let it fall, every pension in the United States is going to be gone. Poof, gone. And Social Security, you might get that paycheck, but it'll be worthless because inflation is going to be running so freaking high. So this is the reality of things. If they keep printing money, you're going to get your pension, you're going to get your Social Security, you're going to get your Medicaid, Medicare, you're going to get all of that. Except that it's going to be like the paychecks are going to be worthless because of high running inflation. And that's only for the intermediate future. That's like the next 5 years, 8 years, maybe at the most. But once inflation runs way too high, what happens is all these companies they all go bankrupt. And then they can't keep the stock market up anyways, even with all the money printing. And that's what happened with Venezuela. So, Banana Republic style stuff. And in the end, all these people who sold out the generations coming after them, their kids and their grandkids' future, their last 10 years of life is going to be really, really bad. And that's how the universe... It's funny. You reap what you sow. I feel like a preacher right now. I don't care. I'll say the truth. Yeah. So gold's gonna... Listen, guys. You're gonna miss the boat on gold and mining stocks. Possibly. Can they manipulate it back down to 1200 or something? Maybe. Maybe to 1226. It's not going any below that. Alright? It's just not. Where's the other chart? Where's my other chart? I have so many charts open, it's like hard to find what's going on here. Here we go. So, listen, this is how the gold investment goes. I'm not talking about physical gold. Physical gold will preserve what you have. It's not going to make you rich. You might get like a 3, maybe 500% return, but that's about it. The mining stocks are what, it's way higher risk, but the reward can make you really well off, right? That's what I believe. Maybe wrong, you never know. But listen, here's the daily chart on gold. We just broke above 1300 resistance again. Very positive for gold. I think if they smash gold back down again, the bottom will be 1220. I don't think that's going to happen now since we just broke above 1300. I think this is the beginning of a bull market in gold. Let's go to a weekly chart. And that's because of the fundamentals. Because I know the Fed's going to freaking lower rates. So it's just that simple. You don't have to be a rocket scientist to figure it out. Listen, my weekly chart. My blue line, it's crossing below my 200-week moving average. Last time I did this back in 2000 we went in a 10-year decade-long bull market. All right? I've done some research that could help you guys with your research. All you have to do is go to MMGinvest.com. And there's a video here. It shows you what to expect. I give you a preview of the research I've done. And there you go. And then you get a special invite to the private group where I've made some really good calls on some of these stocks. I'm talking huge gains. All right. So there you go. Can I be wrong? Yes. This is to help you with your research. You have to do research on the side. This just, helps you with your research. You have to still do your own research at the end of the day. And I could be completely wrong, right? I'm not a financial advisor. So I've just compiled some data. And then also you get the free Trading Academy for beginners. And you get all of my indicators. If you're new in the private group, ask me if you don't have the indicators. I'll give them to you. But I posted them in the alerts room if you scroll all the way up through it. And then you get a newsletter. And there's a 200-page report with all of the gold and silver mining stocks as well. All right, guys. Until next time, smash that like. Leave anything in the comment section. Leave in the comment section what you want me to cover in future videos. And please share my videos. It's the only way my channel grows. And if you're watching this on the WolfPack Cryptos channel, please go to the MMGinvest YouTube channel. Just type in MMGinvest. You'll see the lion, right? The gold lion. And subscribe there. I need 1,000 people on that YouTube channel because I want to monetize it, because it's the only way that channel will grow is if it's monetized. If it's not monetized, YouTube, it doesn't show up in the search results. I'm not going to make money off of it. I'll make like maybe $50, $100, but in a year. But that's why I need it monetized. All right, guys. Until next time.